Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's program, we're going to be looking at the question that everybody wants to be answered, and that is, have we entered the bear market? As we've now closed below the key 50 simple moving average on the weekly time frame, can we confirm that we have now entered the bear market? So we'll have a look at that. And as per the title of the video, if indeed we have entered the bear market, then what can we expect for the next 12 months based on what's happened historically? This is incredibly important, and for those who are wishing to trade or invest during the bear market. And as per usual, we'll have a look at the 60-day cycle to see exactly where we are and where we're heading in the next few days and weeks. So if that sounds interesting, you know what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. And this is it. The white line here is the 50 simple moving average on the weekly time frame, and each time the price for Bitcoin has closed below this, we've entered into a bear market. Now that doesn't mean that the price can't come back and retest the white line one more time, which is currently at around about 102,000. Many people think that once we've closed below this is what's going to happen. This is not what's happened historically, so we can't really expect that to happen. We can expect counter trend rallies along the way. And the question is really, have we confirmed the bear market here? And of course, if you've been watching my channel, you'll know that this is one of the first signs that we've entered into a bear market. The main confirmation will be on the monthly time frame, the 8 EMA, the 8 exponential moving average. And as you can see quite clearly here, the current monthly candle has now fallen below that, and we now have around 13 days for this to recover back if it's going to tell us that we're back in the bull market. However, now that we've closed below the 50 simple moving average on the weekly time frame, that is a very strong prerequisite, a preemptive signal that the 8 EMA on the monthly will probably, more than likely, higher probability will close below this level here, which is going to be around 103,000. So I am expecting a counter trend rally from where we are, and as you'll see later on in the program, it's highly unlikely that we're going to get back above the 103,000. Even if we do that, history tells us that this chart is now quite damaged, and the damage in the structure generally means that, especially in the time band, and this is the most important thing, in the time band of the end of the bull market, which we've expected around October, November, December, and we got that here at 126,000. There were a lot of signs and signals that we've been going through on this channel, and in the private member section we made our decision to exit our positions 4 weeks ago, and that's because we were invested with the Bitcoin miners, and because of their greater volatility we had to take preemptive action before any confirmation with Bitcoin. Otherwise, as you'll see with the Bitcoin miners, they're already about 60% down before we've even got the confirmation with the 8 EMA. So these are the types of things you have to consider if you're going to be invested with the Bitcoin miners. So we've taken our decisions in the member section. So the question now is, as per the title of the video, where do we go in the next 12 months with Bitcoin? And to have a look at exactly how Bitcoin behaves in a bear market, what we have to do is look at the historical context and know that there are 3 lines that you really need to put on your chart from now on. Now that we've tentatively entered into a bear market, which will be confirmed by the 8 EMA on the monthly time frame at the end of this month. So while we're waiting for that confirmation, this is the kind of thing that we will need to look at, because it's the same thing that happens time and time again. So there are 3 lines I'm talking about. Is the 8 EMA, the blue line here, that's the 8 exponential moving average. And then the yellow line is the 21 simple moving average. And the white line is the 50 simple moving average. And for those of you who've got your eye on this figure here, 3 EMA, as I mentioned many times before, the blue line is not the 3 EMA. What this 3 EMA is alluding to is, if you go into the settings, there's 3 different exponential moving averages. The only one that's ticked is this one here, the blue line. If you go to the inputs, you'll see that's the 8 EMA I'm looking at. The other 2 which are not ticked are the 21 and the 34. Because every time I mention the 8 EMA, you always get some eagle-eyed keyboard warrior who wants to have his say and say this is not the 8 EMA, this is the 3 EMA. So there you go. It's the 8 EMA, the 21 simple moving average, and the white line is the 50 simple moving average. So this is what happens normally. So once the price here goes below the 50 simple moving average, this is your first confirmation that we're in a bear market. And once we do that, then you follow the blue line here. You can see quite clearly it comes and finds resistance on the blue line. Once again, finds resistance on the blue line, and when it gets above the blue line, it finds resistance at the yellow line, the 21 simple moving average. And this is what it does all the way through. It's either the blue line or the yellow line, and then before the start of the new bull market, you'll see that on one occasion it has this habit of going to the white line, the 50 simple moving average, before we get back into the bull market. So just keep an eye on that. And if we move on to the second cycle, exactly the same thing happened here. You can see that once it fell below the weekly time frame, which was this candle here, again the blue line took over, and then when it actually went above the blue line, we found support here on the 50 simple moving average. But after that, we never went to the white line ever again. And it was either the yellow line or the blue line, but mostly, for virtually 80% of the bear market, the 8 EMA is the one that actually provides the resistance before the beginning of the next bull market. So once again, the majority of the time, 80%, you find the blue line, the 8 EMA, is the one that's the most resistant. Then on the odd occasion, a couple of times it goes to the yellow line, the 21 simple moving average. But on one occasion during the 12 months, it finds resistance on the 50 simple moving average. So that's happened 2 cycles out of 2. And if we move on to the third cycle, which topped out in November 2021, virtually the same thing happened one more time. Once we closed below the 50 simple moving average, which was here, and as I mentioned, it doesn't really mean it's going to go straight down, because the following candle actually recaptured it above the 50 simple moving average. But by that time, the chart had lost its structure, and an inherent weakness was then triggered off in the charts. So what we really got was, having lost the 50 simple moving average, the next candle went up to the blue line, the 8 EMA, and then the third candle also went up to the 8 EMA before finally losing it there. And then once again, the 8 EMA was resistant all the way through until it came and retested the 50 simple moving average one more time. And then after that, the blue line took over here. Like I said, for 80% of the move down, it's the 8 EMA you need to watch. But on the odd occasion, it comes up to the 21 simple moving average. So you can see that in each of the previous 3 cycles, it's hit the 50 simple moving average once during the 12-month bear market before the new bull market started. So this is what we've really now got to look at, which nobody seems to be looking at the moment. So coming to the current cycle now, if history is to repeat, and there's no reason why it shouldn't do, we've now fallen below the 50 simple moving average yesterday. And as we saw, the price didn't get back above the 8 EMA until this was all confirmed for the downside. So that historical perspective is giving us a clue of what to expect going forward with a higher probability. And always remember, it's all about probabilities. Nobody can ever give you any certainties and guarantees. At the end of the day, nobody's got a crystal ball. We can only base everything on what's happened in the charts. So the current situation is now that the blue line here is currently at 104,000. So if the historical experience is to be repeated, the price for Bitcoin now should not be crossing above the 8 line. So wherever it's going to be, currently on this candle, it's at the 104,000. So my expectation would be that the price for Bitcoin is now not going to recover above the 104,000. So if, as expected, we're expecting a counter trend rally at this point, it's going to get rejected at the 8 EMA on the weekly time frame. That's as high as we can expect. And what the history is telling us is that the 126 is the top. We're not going to retest that. We're not going to retest the 116. That would be above the 21 simple moving average. So the only hope we've really got now is for this week's candle to go all the way up to 104. However, the higher probability play is actually below the 50 simple moving average. So unless Bitcoin wants to go back and close above the 50 simple moving average, which it's done once in the last 3 cycles, that seems unlikely. And the reason why I say that is if we move on to the daily time frame, what we're going to find is that the 8 EMA on the daily time frame is going to be a little bit of a resistance here. And because the underside retest is around about the 99,100,000. The chances are, as this moves up, the blue line will move up a little bit as well. But as we know, just like over here, the price does go above the 8 EMA sometimes, and even up to the yellow line. So again, The yellow line here is around about the 103,000. But I would suggest that because there was a lot of strong buying up at this point, so there was a lot of strong support, so this strong support will more than likely become the strong resistance. So the price looks like with a higher probability is going to get rejected at around about the 99, possibly 100,000, because the 100,000 is a round number. And generally the price tends to move towards whole numbers. So this is where now I'm expecting a rollover. And then at the end of this month, the 8 EMA on the monthly time frame will confirm the end of the bull market. And the 126,000 is more than likely now, with a very high probability, going to be the top of the bull market. So that's what I expect over the next 12 months for the Bitcoin price to be following down the 8 EMA for most of the part on the weekly time frame. And on the odd occasion get to the 21 simple moving average, and at least once before we have the next bull market is going to touch the 50 simple moving average at least once down the line here. And the question is, how far can Bitcoin go in the bear market? Okay, for that we need to have a look at the overall bigger picture view of what's happened in the past, of where Bitcoin has actually come back to after the 12-month bear market. So here we are in the first cycle here. The price came back and found support on the 200 simple moving average. That's the purple line here that's weaving through these prices. So in the first cycle, it came back to the 200 simple moving average. After the second topping, it came back to the 200 simple moving average twice there. And in the third cycle, it actually fell below it here. And as you can see, the trend, because of the law of diminishing returns, we're falling weaker below the actual 200 simple moving average. So let's have a look at exactly where we are here. So this is the current situation. As I'm doing this video, the price is now 95,700. The 200 simple moving average is currently at $55,000. But as we've seen in the last cycle, the price for Bitcoin in the bear market actually fell down below the 200 simple moving average. And if you were to measure that from the point where it fell down to its bottom, that was around about a 30% fall below the line. And as we've seen, this average is getting weaker. So therefore, you would expect a 30% plus fall during the next bear market. Of course, nobody knows the exact amount, but if that was the case, if we take 30% below that line, that's going to take it to around about $38,000. However, we know this is a rising trend line. And if you look at the last cycle, when we topped out at the 69,000 here. So this was our topping in November 2021. If you look below, the 200 simple moving average was at this point. And even despite the fact that we came back down in the bear market, that line continued to go to the upside. Because it's such a long-term moving average, this fall down here didn't have much of an impact on the 200 simple moving average. So based on that particular move, you can see that this line here is going to probably continue on a similar trajectory. So if we move this here and extrapolate this out, we're expecting a 12-month bear market. That would take us to October 2026, assuming that the October 6th top at 126,000 was the actual top, and we'll confirm that at the end of this month. We can at least half confirm it with the closing of the 50 simple moving average. If we extrapolate this line to that point, that would take this line to around about 68,000. Then maybe a 30 to 40% fall from there. A 30%, which was the equivalent of the last cycle, would take it to 47,000. But as we know, the price is falling to lower levels here. So let's say even if we do a 40%, that would take it to a more realistic figure, I would say, of 40,000. And if you look on the charts, the 40,000 does look actually quite a realistic figure, because if you look left here and look exactly where 40,000 is, it actually has a lot of resistance and support here. Look, so it has a lot of resistance all the way back here to 2020, and then resistance here, a lot of support, a lot of price action, and then a lot of support here as well. So this 40,000 seems to me to be the high probability play for the end of the bear market, taking us from where we are to the end of 2026. And for those of you who are waiting for an extended bull market, thinking that we're going to go back up again, that's always going to be on the table, and I would never disregard that particular type of thinking. And if you've been watching my videos over the last 5 years or so, you'll know that everything we do here on this channel is based on probabilities. So while that probability still exists and it's always going to be on the table, and I for one would never disregard or disrespect anybody who thinks that we're going to still have a bull market until the first or second quarter. However, yesterday's close below the 50 simple moving average reduces that probability from 30-40% down to 20-25%. And the problem that a lot of people have, is really not to do with anything else apart from the psychology that the market creates for you. If you can just understand how the psychology works, you'll understand why there's a lot of denial that we're in a bear market here. And to explain that, I'm going to go through this Wall Street cheat sheet. It's something that happens in every bull market and every bear market. And this particular understanding can actually save you thousands and thousands of pounds, both down here in the bear market and also here in the bull market. And that is a simple concept called conditioning. What the market does on the way up here is that every time it goes up, it brings the price down, and then what happens is that we make a new high. And that high is higher than the previous high. And then we're faced with a new pullback, but then the next high is higher than the previous high. And this continues all the way up to the end of the bull market. But by the time you get to here, you've been conditioned into believing that every pullback is going to lead to a new high. And hence, everybody's now expecting a new high above the 126,000. However, cycles, when they come to an end, will show signs and signals that the trend has reversed. But 95% of people don't pick those signals up and hence keep waiting for this so-called extended cycle or the next top or a continuation of a bull market. And unfortunately, by the time they realize that the market has actually topped out, they're having to get out at 50, 60, 70% lower. And this conditioning on the way up is exactly the same as the conditioning in the reverse on the way down. So this is what's more than likely going to happen on the way down, that every time we come back up, it's going to be a lower high from the previous high. And then we'll go back down and then we'll create another lower high. But at the same time, we'll be going lower than the previous low. So this then starts to condition you into thinking that every time we go up, it's actually going to go below the last low point. So by the time you get down to here and maybe get to the actual bottom, the conditioning of knowing that every low point is going to be breached by another low point stops you from buying anywhere near the bottom of the market. But there will be signs and signals in the change of the trend here that will tell you where the bottom is going to be. And once again, the majority, 90-95% of people don't pick these signals up because just as they get conditioned into believing that every fall is going to be met with a new high, they're going to get conditioned on the way down that every high is going to be followed by a new low. And one of the main reasons why it's very important to understand historically how Bitcoin has behaved is that once you understand the historical structure, and we know that these structures do tend to rhyme with what's happened in the past, and what this does is to create opportunities. So if you know that in the past, this is what's happened, that there will be an opportunity of the price coming back to the 50 simple moving average one more time, and for majority of the time, 80%, it's going to get rejected at the 8 EMA down here. That creates opportunities for shorting the market in the bear market element of the 4-year cycle. And this is what we're going to be looking at in the private member section over the next 12 months. We're in the process of creating a bear market portfolio, just like we created a bull market portfolio. So if you've been watching our channel here, we started our private membership at this point here in January 2023, and the full strategy that we followed, once we got in right at the bottom, we dollar cost averaged in to the bull market here, the equivalent of 17,500, at the equivalent of 17,500 and 15,500. So this was our start of the portfolio back in January 2023, and the strategy was to capture the whole of this bull market and to try and get out at the highest point we possibly could. And the idea was that nobody's ever going to get out right at the top. But if you can manage 70, 80, 90% of the move, then you'll have done really, really well. So the idea was really to hold through the oscillations of the market. So with our portfolios, if you've been watching our channel, you'll know that we've been running this portfolio since the 6th of January 2023 with $100,000, and that $100,000 in the bull market came to 1.069 million on the passive portfolio. We had two portfolios, the other one being a trading portfolio, which went up to 800,000. And just to let you know, we're not perfect here. We did actually take part in what we thought was going to be a counter trend rally last week, but we lost around 50,000 on this passive portfolio. So the final total here now is at 1.019 million. So we got a 10x out of the current bull market, and we closed our positions in two lots, just like we bought in the bear market in two lots, at the equivalent of Bitcoin being at 17.5 and 15,500. We sold our first lot on the 20th of October, which is 4 weeks ago. And then the second lot, we sold 2 days later when it was confirmed to us anyway that with a higher probability, the miners had topped out. So if you look at Marathon now, yes, on Friday's close, it was at $11.99 and we sold the first lot at $21. And I think the second lot was around $20. So we did manage to get in at the bottom and get out at the top. And our idea is, so by using the same indicators that we did to try and get in at the bear market, we're going to use those same indicators to get back in at the end of the current bear market, should it indeed be confirmed by the ATME on the monthly that we are now in a bear market. And the main narrative that we used in the private member section to get out with the Bitcoin miners at near the top as we possibly could was simply based on these 60-day cycles. So while Bitcoin was conditioning everybody to expect a new high all the time, and to be perfectly honest, we just got very lucky. What we had noticed with the cycles, the first sign was here back in August, that we started the cycle at this point, and after this particular high, we came back and actually triggered a failed cycle. And in the time band at the end of a bull market, we would have been expecting much higher highs, a right translated cycle, but instead we got a failed cycle, which is not characteristic of a market where we're expecting a blow off top. So this was our first danger signal, which I was mentioning time and time again with the Bitcoin miners, saying that there's something deeper going on with the market here. And this signal was then confirmed by the following cycle, which we're still in now. And this cycle started here on the 25th of September. So once again, it was following the same pattern as the previous 60-day cycle, where we went to a high, but instead of actually moving on and making a right translated cycle, it came and actually caused another failed cycle. And it was at this point here that we got out of the miners. This was our trigger around 17th, 18th of October, that there's something quite seriously and deeper wrong with how the market is playing out. And because the miners are going to fall much, much greater than the Bitcoin price, it's better to actually take the profits before we see this happening. So if I give you the example of Marathon, we sold here on the 20th of October. This was our first sell. So Marathon had topped out at 23.50, and this is where we realized there was something not quite right. So we got out at this point here and managed to avoid this cascade fall. So we've avoided around about a 50% fall that we've seen in the Bitcoin miners. The reason why I'm showing you this is that we will be having a bear market portfolio, which will be running down, hopefully, over the next 12 months, once the bear market is confirmed. And even if trading or investing is not really for you, what we cover in the private member section is that we do 2 videos a week, one video on a Wednesday and another one on the Saturday. And we also do a market update every single day, Monday to Friday, at the end of the closing of the markets. And if all of that is of interest to you, then you can join us by clicking the join button below any of my videos. And if you're on a handheld device, you may not see the join button here, but in the description box, you'll see the Miners Membership Join link. And when you click on that, you'll see that you can cancel at any time. There's no obligation to carry on. You're not tied into any contract or anything like that. So for the price of 1 coffee per week, which is $12.99, you can have 2 videos a week as well as a market update. The types of updates I'm talking about are under the postings heading. And these are the kinds of updates that we do here, as you can see. So that's Monday to Friday. Okay, so I'm going to leave it there. I hope you found value in the video. If you did, then please do remember to like and subscribe if you haven't already done so. And if you've got any comments, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.